OpenAI, one of the most important AI companies in the world, is reportedly expecting its revenue to 3x in 2025 versus 2024. But what if I told you that this is amazing news for Nvidia stocks and other AI chip players like AMD, Marvell, Broadcom, and Micron Technologies? You know what else is amazing? You not forgetting to hit the thumbs up, subscribe button, and checking out my free Substack link below. All jokes aside, in today's episode, we will do the following. First, understand OpenAI's financials. Number two, understand why this is amazing news for semiconductor stocks. And number three, my overall final thoughts. So let's get started.
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for their subscription service. Now, let's continue with today's episode.
All right, so if you are watching this on Saturday, late on Friday night, New York Times came out with an article known as OpenAI is growing fast and burning through piles of money. Within this article, they did provide a lot of information about OpenAI's financials, and we can see monthly revenue for August of 2024 was roughly $300 million, up 1,700% since early 2023. So we can see this company is growing its revenue dramatically. And for those that are not familiar, there's two main ways that this company is making money. First, it's via subscription, which is your typical consumer, or it can be subscribers via the enterprise market as well. The other way is developers are using their solutions and APIs and then paying some fees for them. So that's the main source of revenue. It all has to do with their AI solutions. Now, for 2024, they expect revenue to be roughly $3.7 billion in annual sales. Now, in 2025, they expect that to over 3x to $11.6 billion for 2025. So we can see that is some crazy growth. Now, it is important to know that while they are growing at some crazy levels, they do anticipate 2024 losses to be roughly $5 billion due to operational costs. I'm pretty sure those operational costs are their overall engineers and also the amount of computing power that they need to kind of run these solutions. So obviously, we can see a high grower, but not profitable at the moment. And I'm pretty sure this is going to be the same for any company that's in the AI space. And some of you might be wondering, Jose, why is AI so important if no one's really making money out of it? Well, OpenAI might not be making money out of it, but like we've talked about in the past, other companies like Microsoft might be using AI solutions to increase their market share in the clouding market, to improve their core products. We have companies like Meta that are using it to improve their advertisement platform, same with Google. So there's a lot of use cases right now. Maybe OpenAI doesn't have the best use case to make money, but again, OpenAI is really trying to develop that next generation of artificial intelligence, which can make this a very big company. So now that we understand the financials of it, I kind of want to explain why this is good for semiconductor companies. And before we go any further, you guys know that earnings are starting back up Q3 calendar year. So obviously I am releasing an ebook where I will be covering various semiconductor companies. If you use my YouTube code YouTubeQ3 on the pinned comment, you will get $10 off on the Q3 earnings ebook. And as a special gift, I will also send you a free Q2 earnings book so you can see what happened last quarter as well. So check it out on the pinned comment. I appreciate the support. And let's get back to today's episode. But before I do that, I want to take a closer look at how this company can 3x its revenue. This is just for any company, right? If you 3x your business or 3x your revenue, there's only two ways to go about it. The first is increasing the amount of customers that you have dramatically. The second way is increasing your overall price. Now, if you 3x the amount of customers you have, that means that you're going to have more customers doing more response and you need more computational power, right? Because right now, if you see OpenAI's most updated model, OpenAI o1 preview, has amount of limits that you can send per week or per day. For their most advanced model right now, you can only send 50 queries per week. Their second most advanced model, you can send 50 queries per day. So obviously the reason they're doing this is because they are computational restricted, or they have a bottleneck in computational power where they can't really increase the amount of queries. But now if you increase your customers by 3x, you're going to have to need more computational power. If not, the amount of queries per model is going to be lower for each customer, and customers are going to be mad. So if you 3x your customers, you automatically need more computational power to handle that new amount of queries coming in. Now, the second way you can either do this is by increasing your subscription price 3x, right? And if you do increase your subscription price by 3x, you're going to need to increase your AI solution models, because there's a lot of competitive space in this market. There's Anthropic, which I personally enjoy a lot. And if you want to increase your prices, you need to have some crazy AI model. But for you to be able to train any crazy AI model, you're going to need high computational power as well. So whichever way you go, if it's either increasing prices because you're improving your AI model, or you're just increasing the amount of customers, you're still computational bottleneck. So you need AI chips. The other thing I do want to mention is, yes, AI chips are getting better and better each generation, right? We know that NVIDIA's Hopper 100 and is nowhere near the strength of NVIDIA's Blackwell platform. So you might say, okay, Jose, obviously you might need more computational power right now, but if these chips are getting stronger, which they are, in theory, you need less chips to run the current models. And that is very much true. To run the current models, you're probably going to need less next generation chips. So to run OpenAI's O1 preview models, you're probably going to need less Grace Blackwell chips or Blackwell chips versus Hopper chips. But we have to remember that these models are also improving, and the models are improving at a faster rate than chips are improving. So even if you need less chips for your older models, you're going to need more chips for your newer models. So regardless, any way we're seeing right now, it seems like the AI chip company is going to be very strong. Now, in the AI chip market, I believe there's 5 players that can really win in this space. My number 1 is Nvidia. My number 2 is AMD. Then number 3, I would have put it Marvell and Broadcom and Micron. I wouldn't put any of them in number 3, 4, 5. I think they all have the ability to kind of gain well. I enjoy Nvidia a lot. But we can see in current forward PE ratios, most of them are sitting in the high 20s or the low 30s. I do believe values right now are more of small dollar cost averaging, not really buying opportunities, as the market gives us plenty of buying opportunities in the future. And you might be wondering, Jose, how can it give us buying opportunity if everything you mentioned is very bullish? Well, everything is very bullish in a straight line. There's always the possibility of issues happening within the short term. I mean, Nvidia, we had the perfect example of kind of regulations in China and regulations here in the United States. We also had issues with the Blackwell yield, and all that are, even though it's a bullish trend, all that kind of created a lot of volatility and created buying opportunities for Nvidia. I believe moments like that are going to continue for all these companies as well, where there's going to be moments that are going to give us really great buying opportunities. So that's my overall thoughts on the prices right now. Now, you might be wondering, Jose, aren't companies like this going to be using their own AI chips? Isn't that bad for companies like Nvidia and AMD? Well, yes, for those that are not familiar, there's 2 types of AI chips. There's merchant AI accelerators, which are Nvidia, AMD, and Intel somewhere in here. And in their custom ASIC solution, you have Marvell and Broadcom, which help big players develop their own AI chips. But it's very important to understand the difference between the two. So merchant AI accelerators, your typical data center GPUs, are highly programmable and adaptable to various tasks. They can handle a wide range of AI workloads, and any new AI workload that's going to be coming up, they will be able to adapt to it. Now, custom ASIC solutions are only optimized for one specific AI workload. So if in the next year or two we see new AI workloads, those custom ASIC solutions are not going to be useful. So most of and all these big tech players are going to be mainly spending money on GPUs, and they are going to be offsetting some costs by purchasing or making their own ASIC solutions. I mean, we can see here a screenshot from Marvell's most recent AI product that they do believe the AI accelerator market is going to grow dramatically. But within this AI accelerator market, only a small portion is going to be custom ASIC solutions. So again, I think the biggest important reason for this is the AI market is evolving at such at rapid levels. You don't know if today's workload is going to be tomorrow's workload. So you need to have a product that is going to be able to adapt to it. No company is going to spend 10, 20, 15, 30 billion dollars in ASIC GPUs when they know in the future it could change, and they rather have a merchant AI accelerated GPU that will be able to adapt. So this is the big difference between the two, and that's why I believe this is going to be a market where everybody can win. Nvidia can win, AMD can win, Marvell can win, Broadcom can win, and Micron can win. The reason Micron can win is, for those that are not familiar, within these AI chips, you have pretty much two main products. You have kind of that AI accelerator die or that ASIC accelerator die, and then you have a lot of HBM stack. And HBM is a form of memory that is used in AI accelerators, and Micron is one of the few companies in the world that's providing this solution. So that's what I wanted to bring up here and kind of explain why I thought this was great news for the AI chip market. Like I mentioned earlier on, I do think maybe right now prices are a little bit, not extended, but a little bit higher than I would like. If I was to open up a big position, it would be more of small dollar cost averaging and waiting for those opportunities. Again, those opportunities are called opportunities because no one sees them coming. And usually they come out of nowhere. And now with AI chips being developed at such a fast pace, with the AI market developing at such a fast pace, a lot of news can come and go, and we can get plenty of buying opportunities. I gave that perfect example with Nvidia and the Blackwell. AMD recently kind of had that sell-off where they really weren't making money off AI chips, but now they're showing elsewhere. And all these other players, right? Micron Technologies just had a great buying opportunity as well within the past few months, in the past few days. So there's always the time for opportunity, and I think patient investors are going to be true winners. And if one can't be patient, small dollar cost averaging, in my opinion, is the best way to mitigate some risk. But those are just my overall thoughts. I hope you guys enjoyed today's episode. Take care, have a good day, and see you next time.